General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.
Hello everyone, welcome to this week's edition of Bulls versus Bears. Just it's the old Bears this week.
That's
the old, actually the Bull and traditionally you're the old Bull, I'm the old Bear. But as we just said, I probably won this 1 week out of the last 100 weeks.
That's true. That's true.
Obviously, disclaimer is all taken care of now by the wonderful AI. And but JT, you were on the call this week with Francesco from Ords.
Yeah, so I was on with Francesco for the first time with Nadine. Basically, you usually get your stock standard run of stocks there, but usually, unusually, you'll get one that you haven't seen before. And one this week was polymetals. So POL was the code. I had to do a little bit digging onto it, and I like it. So, and the funny thing was, I thought I'd just give it a buy because but Francesco Ords actually covered it, and they had a buy recommendation as well.
Yeah, but I dare something listed it.
Probably.
Yeah, but that's okay.
But I'm just saying, I was just surprised they
were even covering it.
Yeah, exactly. But
I did a sub for Henry Jennings on the investment committee this week, under media embargo at the moment, but it was one of the double buys. We had to review those, and it was good to be able to say, like, finally there's a silver stock you can you can consider buying instead of having to buy physical silvers. So
so I don't know how that sort of flew under our radar, but it's actually
only listed a while ago, right?
No. It's been listed for a good just over 12 months. But it started running back in October last year. So it's run from like 25 cents to 85 in that time. They did a cap raise at 80 and it's trading at 67. So and they're going into production as well. So there's going to be cash flows, I think, in May. So
okay.
So real near-term producer. And the thing is, I wrecked it a couple times because they did a cap raise at 80 cents and you can get it at about 67 right now.
Yeah, okay. I mean, with those small ones going into production, it's usually a good time.
Yeah.
We've also got for those who want to learn about the Lassonde curve, we've got a education piece on the website. But
so one thing I will say about the Lassonde curve is that the main difference I see this sort of run on commodities is that there's a lot of mines where they'll actually just go into production on a smaller part of the ore body.
Yeah.
Before they'd be drilling the whole thing out, and that's where the Lassonde curve kind of applied. But now I've seen companies more aware of that.
Yeah.
And to counter that, they'll actually start production in a small in like their best part, and then kind of expand out.
Okay. I would assume that technology's probably had a big hand in that.
Yeah.
But I mean, maybe because we've been hunting for a silver miner forever, basically. So maybe that similar to what HGO had with that. What's the GIC? There's the subsector classification.
Yeah.
A lot of them will quite often be when they're fledglings, they'll be diversified metals.
Yeah.
And it won't actually give you. So I think HGO is still classified as diversified metals and it's a copper miner. So
well, it just shows us what like we often say, it's a popularity game. So, you've got to do everything.
And if you can't find it, people who find these things via their screeners like we do, if you can't find it, it's the old story. If you strike silver in the woods and no one's there to see it,
well, that's it. So you got to tick the boxes, and as we say, it's a popularity contest as well. So
it's a fine line between having a CEO that is a showman and a CEO having zero awareness of how people might find their stocks.
Yeah, exactly. So I'm sure we'll touch on that soon enough.
Absolutely. So and you got to be careful as well. Because some of them are. I mean, my big gripe at the moment is Life 360 in that regard. Remember how we had the it wasn't price to earnings ratio, it was price to revenue ratio back in
or price to sales.
Price to sales in 2021 and into 2022 and then basically everyone just went, oh no, that's right, you've got to make money. Life 360 is bringing back the price to revenue price to monthly active users.
Or didn't you say price to clicks?
Yeah, price to clicks. Yeah, if they could get paid in likes, they justify the $4 billion market cap for a company that's never turned a profit. So apparently their total addressable market is all of the roadside assistance, all of the insurance, and all of the family tracking in the world.
Oh, okay.
Yeah.
No one else is gonna. Everyone else is gonna.
No competition there. And I've used that thing personally. My battery went flat in about half a day. And I think people are very much overlooking the fact that Google and Meta have had exactly the same functionality this thing has for roughly about 4 or 5 years.
Mm-hmm.
So you literally go to Google Maps with your family and you click one button, you got Life 360. And your battery still works. It's amazing. But yeah, but it is getting massive subscriber growth. But somewhere between the 11 to 12% mark actually make the leap to paying for it. So,
well, that's actually okay, I think. But yeah, I do agree with you. It is highly valued. And yeah, it's in one of those what do you call it, sectors where the MAG7 that's a rounding error for the MAG7.
Yeah, no, that's exactly right. Like those companies, Meta and Google, that should until that's genuinely a few $1 billion. Like what happened with buy now, pay later.
Yeah.
No one paid attention until, so now Apple's got it, now Amazon's got it. So then you've got to I suppose they've got to be big enough that they register and then, but they're saying the advertisers will want it, blah blah blah. It's like, well, I'm pretty sure Meta and Google have got more customer data than Life 360, but but it's just amazing. There's a bit of there's a bit of analyst blind spot going on all week this week.
It's always been there.
Yeah, which is a beautiful segue to WiseTech.
Yeah.
It's not necessarily a blind spot with WiseTech. It's more Stockholm syndrome. Everyone has gone, well, the company's still growing, it's the lowest PE, and they're completely missing the fact that a 70-year-old man has booted half his board for supposed alleged misconduct. But if 4 people, non-executive directors, leave in one go, there's obviously something there.
Yes.
So it's good there. Otherwise, why would you leave the biggest and best tech company in Australia? So now, maybe they should call it Richard White Tech, I think, now going forward. So because you literally have pinned your hopes to the only 70-year-old head of innovation for a tech company in the world. It's we stock coverage and basically for the diehard fans who are clients, we sold out the start of the week when the 8th allegation came forward and the board left and all that sort of thing.
Yeah.
And we've been fielding questions all week. Should we buy it? Should we buy it? I think it's going to finish on its ass. It's around about 89.50 at the moment.
Okay, so let's just say it closes sub 90. So it was like 125 maybe this time last week.
Yeah.
So that will show you that's a decent whack for it.
And projects were delayed, which is very unWiseTech, because there's a slight distraction with being in the paper every day. The financial review's been like Who Weekly for about a month and a half. And then that key person risk. I mean, surely there's got to be a fair few fund mandates out there that actually would be forced to sell on that key person.
Well, that's not just that. We just said it's their ESG filter.
Yeah,
like your
governance.
Your governance right there. It's just like, hey, the board is jumping ship.
And everyone's happy to do that on a small company. We're talking about Australia's 17th biggest company.
Yeah.
Having a succession plan in place. Even we've got a succession plan in place. And we're 20 months old. So, it doesn't pass the hit by a bus test for me. But I think people are still saying buy the dip, but I kind of think that forward PE is still 60, but and current PE is 100.
Well, the thing is, we're going to get onto the MAG7, but it's just the environment as well. It's like if this was every dip in the MAG7 was being bought, you'd be like, okay, someone's going to come in and buy this up, and I think there's a trade there. But
well, and they've been earnings. WiseTech been earnings as well, effectively.
Exactly. But it just this time just feels a little bit different. That's all.
Well, broader market weakness isn't going to help because if you're underwater, I mean, it went back after the October drop to 100. It went back to a fresh record high.
Yeah.
And we did buy back in at 110 when we thought it was all over and he was moving aside. And I think we basically bailed in the 120s just as more, further, muckraking and dirt came out. But that's been the thing. That's the front page on the weekend edition this week is MAG7. 6 out of 7 beat expectations on earnings.
Yep.
7 out of 7 were down on the day when the earnings were released, and only Apple by 1%. And we've still got the US session tonight.
Yeah.
By one is the only one that's up for the month.
Yeah, and that's what I have to say is basically if there's in a bull market, all news is bullish.
Yeah.
So if we have good earnings, and I think I might have said it in the last few earnings, what you're looking for is that if Nvidia comes out with some really, really good earnings and the market just sells off on it, that's a really bad sign. And that's what we clearly had last night.
Well, and it wasn't last night. It was like literally the last 45 minutes. I was here early this morning watching the last hour, and I watched the Nvidia earnings. And for those of you who don't know, I was a day trader for 20 years. So I was watching the price action over Nvidia, and that thing never ever looked like it. There was every time it showed even the 0.5% rise, it was just met with selling really bad. Like I was pretty surprised, and it ended up down 1%. And I thought, they've delivered exactly the same earnings they've delivered for 2 years straight. Yeah. There wasn't any difference. They beat. The outlook was great, but that thing was only down like a few percent with 45 minutes to go, and then it ended up down 8.8.
Wow!
And it was sold from the open. So that's that could be. I mean, I've been bearish for a while, and anyone who's been a long-term listener to the podcast knows that I've been wrong for a long while. But this genuinely now feels like looking at market looking at consumer confidence numbers. We never look at consumer confidence numbers. Like they're starting to pick at the seams and pick at the scabs a little bit, and that's I don't think that's overly positive. So we were 3 bears last week.
Yeah.
So we got one. And we were 3 bulls the previous week. We're 2 from 2. We don't screw this up, JT. So
no. We'll come.
We'll get that in the end.
But let's just finish off. So Star Group's the other one. Today.
Well, actually, this is 3 categorical disasters we've got here. Yeah, Star Group, MinRes, WiseTech.
Yeah, but Star Group they've run out of money. Like apparently they're struggling to meet payroll.
Right.
Yeah, that's how. That's what happens when you can't launder money.
Yeah, that's
yeah, but that's a
payroll in cash.
Oh dear. It's in chips, basically.
Yeah, pay them in chips. That'd be. I mean, that's.
Yeah, but that's a really, really bad sign there. But the thing is, it's a casino, so someone will scoop that up.
Well, and it's a bunch of really good quality property and hotels.
So it's just obviously with all the money laundering allegations and the fines and all that uncertainty, what's happened is all the financiers in the background just want to extend their sort of lines of credit and things like that. And that's why they're struggling to get that financing done.
Well, I think we spoke about it in the podcast maybe a couple of months ago. Excuse me. Just saying that, maybe the benefit is that they want it to fall into the hand of because the creditors might be above the shareholders. So
yeah, that's true. Yeah.
I mean, corporate espionage is not my forte. And MinRes, obviously, the Onslow Road, which they said there was a crash, and they said it'll never happen again. And then one day later, there was another crash, and then now a hurricane, cyclone's gone through it as well.
So it's just bad news all around for MinRes. Yeah, and the share price doesn't look right.
Win a trick. I mean, look, you've got to kind of feel, especially unless they did something wrong. I'm sure there's plenty of smaller business owners out there. You put things through the business, probably not that. Probably not
$1 million.
Probably not $1 million through the Cayman Islands. But I mean, it's pretty. I guess poor behaviour, but it's not wholesale fraud in terms of it's not going to touch. MinRes is a multi-billion-dollar company. So but what, $25 or something? They traded 100 like 18 months ago.
Well, yeah, that's one massive fall from grace.
Yeah, no, I just can't watch it anymore. It's painful. And I looked at Pilbara Mining PLS today that reported well, went straight up to $2.17 and looked like some form of recovery. Just made a fresh 52-week low by like 5%. And they were sitting on $3.5 billion in cash at one stage.
And they're printing cash.
And they've got the cost of production.
Yeah, exactly. Like their cost of production is so low that like even at these low lithium prices, they're still making money.
Yeah. So
it just shows how much. Yeah, and that's what I keep saying about the MAG7. A lot of it is just psychology built in. So it's just it's all about justifying that price. And when the market's bullish, the market can justify any price. But now that there's a bit of caution about, and the sentiment's turning, everything's looking expensive now.
That was one of the hard questions I put to the investment committee, because I'm only a sub basically.
So you can come in and just
and I've got to say my last one, the one stock they put in was a categorical disaster for 6 months. They took it out, sold it at the low, it's bounced straight back up. It was IPD Group. But IPD and MinRes were the ones that I'm like, well, hey guys, what are you going to do about these? Because they look horrible. There was two different answers, and you'll have to go to the Ausbiz website and watch it. It is actually it was quite good today, because they had some cash and rightfully so, because companies have gone okay, but the price action's been horrible in Australia.
There's been some good beats and things like that, but it's very mixed and very I can't.
And if you don't beat, you just open gap down 20. And you just don't get a chance. But Nvidia obviously it was.
So what I did on purpose is that I actually cut and paste one from before the actual price action. So that, you actually read it, and it reads extremely bullish. Wow, everything's growing.
That was one of the things I noticed writing the morning report. Yesterday they were like, it looks good. And this is one thing that people have to be aware of. Quite often, the media pundits and the analysts follow the price, not the other way around. And all of a sudden they were finding that there was margin compression in Blackwell. Like, they haven't even sold Blackwell yet. How can they get margin compression? And those pre-orders are not sold yet. So, then Jensen's doing the same thing. He's making up numbers. But look, it read, to be honest, it read better than the last one.
That's right. So I read it, and I was like, wow, I'm surprised. So as I said, I did it on purpose. I wanted to see what it was before the actual market opened. I'm like, wow, that you read that on its own, it should go up. But the thing is, that's what's happened this whole earnings season. Is that you read that, that's not too bad, and some stocks just got smashed, and you're like, okay, well, it obviously there's something to do with expectations and missing a certain number, but
it's basically been since October 2023. It's been
it's one way up.
One of the best 18-month runs we've had in a very, very long time.
Because
it wasn't out of a black swan like 2020 was, or with COVID or anything like that. It was just a genuine bull run.
It was.
And and I don't know. We're talking in past tense here. That's been a trap for the last 18 months as well. But it really. I think investors are just kind of going, Trump's just tiring. You don't know what's going to happen. We've had every Friday's been down since he's been in power, which is only 5 or 6 weeks. But no one wants to take 48-hour risk because 25 things change in an hour. And you're kind of going, well, how much is enough? I suppose because you've had an incredible damn run. Like, even if you got in halfway, you killed it realistically. So
look, but that's the key, is that everything's gone up, and now from what we can see, the market environment's changed, and now this is where you separate the men from the boys type of thing. Is that basically you've been bullish all the way up, fantastic, you've made your money. Are you going to give it back?
Well, if you don't take profits, you don't win.
Yeah, exactly right.
And so, we could maybe Stars can give us the bloke that's up $5,000 at the table. There's a lot of people walk away with nothing. So, but myself included. But Autodesk was a good one, and that was kind of one of our high conviction AI picks.
So I read that though. Like usually when a company is doing a lot of cost cutting, like that's a reward for the share price, but it didn't quite happen this time. But
it was up 8% early. They released aftermarket, and I think it finished up a couple of percent. It's not an AI growth company, but they're just rolling out AI with their new construction thing. So
it's like an AI implementation.
It's not an AI company. It's a engineering, CAD design, and construct. But this is the thing they're using AI in very well is AI design and 3D printing and modelling, which they did a lot of work for Airbus and reducing and strengthening planes and bits and pieces. But this construction thing is now like from architect down to bricklayer. This thing will manage your supply chain. It will like make adjustments to ordering the whole way. Everything's automated end to end and communication. And so it's kind of it's utilizing and monetizing AI for business productivity, which is kind of what the theme was for the next phase.
And that's why it was a high conviction pick. Like it's basically that fell into the right category that we're looking at.
Yeah, but it's way more boring than that initial AI. Don't get me wrong. We're not expecting this thing to go, the things of percent like Nvidia's done. But more so the companies that are getting ahead of the game and sort of beating out others. And what happened with Google this week?
Cost cutting. So HR and cloud divisions. Interesting that they're cutting numbers there.
I think Meta cut staff as well.
Yeah, so it shows that even the MAG7, they're cutting staff. So interesting that these billion-dollar companies with what were they sitting on? $600 billion in cash.
That's an old number, but that'd be more now. That's like I think I need to look that up because that was like a year ago or more.
But anyway, they're sitting on plenty of cash, but they decided that they're going to start cutting costs. So some HR issues and cutting. HR is getting trimmed down in Google.
Yeah,
and the cloud division. So there's that's the week today, and that won't include tonight, obviously.
No, it doesn't include tonight. I had a look at the monthly one as well. So
even more.
No, not quite as bad. Nvidia's only down about 1.5% for the month.
Berkshire just sitting on 30% cash.
Yeah, which is roughly $380 billion. They still hold more treasury bills than the treasury do. So, but look, this is if you want to learn from history, this is exactly what he did in 01. I don't think it's anywhere near as and people, I said on the podcast a while ago, a few weeks ago, but when people start taking the piss out of him for sitting on cash, that's probably when you need to be selling. And look what's happened. It started from selling.
So I'll give you my little anecdote about Warren Buffett. So I met a guy who's ex-Japan trader.
Yeah.
He's basically lived in Japan. He had his kid and moved here about 4 years ago. So he's going to start trading Japanese equities in a new hedge fund.
Yeah.
And I basically asked him, so what's the advantage there? He said, so in Japan, there's a lot of fat on the actual balance sheets of companies. So they just run.
Well, so the companies are savers as well as the people.
Exactly.
Yeah.
So that actually goes through the whole hierarchy.
Yeah.
And so he's going in there, small companies, 100 million, 200 million market cap, and just basically getting those lazy balance sheets sort of moving, and then just either fixing them up to be absorbed by private equity, or by another listed entity. And like you said, isn't that kind of similar to what Buffett did? No, he goes. So what Buffett did is that he basically came into Japan, got cheap funding from the BOJ itself.
Well, if you're going to lend money to a bloke, I reckon he's pretty solid.
Exactly, but the thing is, like he got BOJ rates on funding at like one.
Yeah, I was about to say, just to inform viewers and listeners, it's like 1%.
Yeah, exactly. So he's getting at 1, and then he bought these trading houses at 4.5. Like these things,
right.
4.5. So he's a like that's how savvy he is. Like basically, he gets the trade paid for by the carry, and then now he's had a free.
And he gets all the upside.
Yeah, he gets all the upsides. He had a free call, and he just said, "No, it's just so niche." Because I was just chatting. It's like that guy never leaves his his house.
It was a big deal when he got on a plane.
Yeah, exactly right. So and then for him to actually go there and actually chat with the right people to put that trade on, just shows how savage the guy is.
Yeah, I mean he's legendary. So, he still lives in the same house, drives the same car.
Exactly. So,
but yeah, I think the next few weeks at least, we've had that little bit of positivity in the start of the year. It's feeling more and more like 2022, where the bond, it was different reasons then. Bond yields went through 2-year went through 1% for the first time in since 2008.
Well, that's one I haven't checked. That's like what the
yields have come off quite a bit.
Yeah, long end to see what the yield ETFs are doing. I'll have to check that out. But because that was a good signal the last time.
The credit spreads.
Yeah. So I'll have to check that again.
No, look, they're not the. I mean, I check on them pretty regularly, but the junk it hasn't really blown.
Okay.
There's not the consumers weakened. Like this is early stages of. But I mean, credit card debt's kind of climbing. Credit card defaults are climbing really consistently over the last 4 months. It's just pipped 2007 levels in terms of percentage. So yeah, look, I mean, credit spreads are a really solid thing to watch, but they tend to it's like hold, and then it's almost like VIX. It holds and holds and holds, and then
it explodes.
But if you're not quick on the draw when the floodgates open, I mean, literally, if I had when I was trading, I was literally trading credit spreads in 2007, and I was a young trader, and I went, I just got out of everything because I went, I legitimately don't know what's going on. If I'd have left that position on the next day, I'd be down $1 million personally. I was like, I was 20. I think I was in my late 20s. Like, I never had. Let me put it this way: that would definitely couldn't afford even the tenth of that at the time. And so when it goes, but I mean that was sovereign risk as well. So I don't think we're there, but they are the sorts of things that once people abandon ship, they abandon ship fast.
So just on that, so the size of the US. The size of the MAG7 is absolutely amazing. But I was listening to a podcast and they talked about who are the top 10 owners on some of these MAG7s. A lot of sovereign wealth funds. So
yeah, okay. The US inflows to the US against the rest of the world stock markets is at an all-time high by double.
Exactly. So everyone's put money into the MAG7.
Yeah.
So it's all the sovereign wealth funds of Norway, of a few other European countries.
Yeah, Singapore.
Huge entities, and they're all betting on the same thing.
Yeah. So you would have to logically think that US dollar is in more trouble than Skippy in a bushfire if we get a sell-off because money goes offshore.
Money can go offshore, but the thing is,
it might go to Japan now they've got inflation and interest rates.
That's it. It's just saying that they either way. Last night was the first sort of sign of panic, and the dollar index rose. So, we'll see what happens.
There's always that flight to safety
exactly.
in the initial part. He did talk more about tariffs again last night with the. I had to sit through. Well, I didn't have to sit through it, but it was on this TV meeting we have Bloomberg on in the morning, and he was on with the British Prime Minister, and I don't reckon he even knew what he was saying. But he was basically threatening Canada and Mexico again, and said they've got till Tuesday. Tariffs are ready to go for Tuesday. Nothing's happened. So better. And the last time the US dollar went up, the last time they announced tariffs. So commodities, mate.
Commodities.
Confusing week, really, wouldn't it?
Yeah, exactly. So gold, silver, they both came off this week. So the thing is, look, in the grand scheme of things, I think this week is the first time that gold actually had two lower lows on the daily for I think maybe 5 months. So Either way, it's the first sign of selling.
Wow, copper and nickel are the only two that are
Yeah. So what happened?
mildly
Yeah,
up.
because copper actually bounced after the Chile news and the.
Oh well, yeah, they happened at the same time. Tariffs on copper specifically was announced by Trump, and then but literally half an hour before it was already on the way up.
Yeah.
Santiago was in like electricity gone, blackout, and which is just how ignorant how much ignorant markets are. Like it was like they didn't give a crap about the Santiago people. It was like there's copper mines out. Like it was just disgusting from the press.
Yeah, but anyway, so gold and silver pulled back. Copper had that sort of little waiver, but overall for
In normal circumstances, copper would have been at
exactly.
7% this week.
Uranium, it's a bad one. Crude oil actually bounced on the tension, so it's hovering at that $70 level. I think that's kind of like a level that maybe OPEC wants to defend. Iron ore, pretty flat. Bitcoin is the ugly one though. So Bitcoin broke through. So 97 was a fairly key support level, and it broke through that earlier in the week, and now it's trading 80 last time I looked.
Yeah, we had an alert at 79,500, and it went off like just before we started recording.
Yeah, so there you go. So Bitcoin, that's been a good barometer for risk, and it just shows that we're in a risk-off mode at the moment. And as I said, dollar index had that bounce, so that's commodities and FX. Yeah, so economy and politics just basically.
There's so much crap, really.
Yeah. So
Trump's pretty much tariffs on, tariffs off.
well, the threat is back on.
Yeah.
But the one that I found interesting is that Tusk wants to send every household that pays federal taxes $5,000. So
Out of the Doge zone.
yeah, exactly. So
Which they would never do in a million years.
well, it has to go to the Congress, but it's good clickbait.
And with a $37 trillion debt, maybe pay the debt off. That's just me. But
Maybe pay some of the tab back.
yeah, pay some of the tab back. Maybe reduce that interest bill to $500 billion every 100 days.
That's it.
Given that as well, obviously, gold's had is wavered at 3,000.
No, but
going to.
yeah. So the key with this trade is that I actually wrecked it on the Monday.
So Gorilla Gold.
Gorilla Gold GG8 is the ticker. So that came up on my scanner. Wrecked it on the Monday. Even mentioned it again on Ausbiz on the Wednesday, and it came out of a trading halt today and rallied. So they've obviously found some other
Nailed it.
Yeah, some great drill hits there, and I think that's up about 18%. So if you do want to get these recs in real time, just subscribe to our member section.
Yeah, so the alpha recommendations, which Jonathan Kai generally look after, but JT's going to have his own. He's got his own section, J Trader as well, which will be probably not for the faint-hearted necessarily, but we're not talking. We're not talking.
Yeah, these are.
There's not going to be a Telstra rec in there. Let me put it that way.
Well, these aren't investments; they're trades.
Yeah.
So I'll be sending out an email so that people can subscribe to it. But basically, I'll just be putting out my 5 best. What's my thing? Just buy stocks that are going up.
Yeah, buy stocks that are going up. It is a pretty simple rule, albeit very hard to follow.
Yeah, exactly.
It's particularly for someone who traded interest rates for so many years.
Mean reversion.
So fear and greed index this week. We are firmly in the fear. But yeah, so I've had a little bit of creative license here, and I've added another segment to the fear thing. That's the oh crap section. So that was I put that up on Twitter, basically saying if Nvidia reports badly, this is where the needle might go. And then they went down.
And now you can use it again.
So I was just saying, I'm just laughing at my own jokes basically. But look, it's already in fear mode. Ben, I'm concerned about.
I remember when it actually.
We were surprised last week that it was in fear.
No, it was like 2 or 3 weeks ago when SP actually made it like a slight new high. That thing was still in sort of fear mode anyway.
Yeah.
I was like, oh man, we just made a new high. Where's the bullishness? But it wasn't there. But we are here at. Are we at like -10? Or No. Just
I don't want to. I don't want to, confuse the viewers, but but we basically want to.
Okay, anyway, so just before we finish up, are you bullish or bearish for next week?
Mate, if I was a bear, I'd be twins.
Well, anyway, I'm bearish for next week as well. So obviously we've had month end. All the weekly charts are going to look horrible now.
And probably the monthlies.
Exactly.
It'd be the first monthly down for ages.
Exactly. So that will scare a few of the bulls out there. So I am bearish for next week.
Yep, and Kai's just phoned in. He's bearish as well. So, but we did have a chat earlier today. He had to go
on his yacht.
Do something on his yacht.
It is 30 out there in Sydney, so lovely day on the harbour.
Yes, indeed. But look, stay safe out there. Make sure you review your portfolios. My recommendation would be anything you're not sure of or you've been looking to sell for ages, just get off your books, go to cash. Cash is a great thing to have when the market falls.
Mm-hmm.
People don't sit there on the prayer mat going, oh, please, if you use the word, I hope it goes up, then that's probably a fair sign that you should probably get out.
Mm-hmm.
And we're not talking about necessarily trading, but think about where your headspace is going to be. If the market drops another 10% in March, something like that,
mm-hmm.
if you've got a 20% cash balance, you're sitting there with a shopping list, licking your lips, going
exactly,
well, and embracing the downfall instead of going, oh no. We've all seen the traders with their heads in their hands. Don't be a trader with his head in his hands.
That's it.
But yeah, we'll chat again obviously next week. And
absolutely. And thanks for tuning.